Welcome back to another episode of Multifamily AP 360. And today's our guest is Alen Lomax from Steed Talker Capital. So welcome, Alen.
Well, glad to be here, and I appreciate you having me on your show, Rama. Been looking forward to this.
Awesome. And thank you very much, Alen. And a little bit about Alen. Dr. Alen Lomax is the CEO and Investor Relations Manager of Steed Talker Capital, a multifamily real estate investment firm committed to enhancing the quality of life for communities and investors. So far, Alen has done fix and flip, apartment rentals, spec home development, and mobile home parks. He is also host of the Real Estate Investing Abundance podcast. So with that, Alen, you want to add anything to your background?
Well, sure. Just a little bit of background. I've had a very, very successful and fulfilling career in higher education for over the last 30 years. And I actually became an accidental investor in real estate, partially because I understood that real estate is a way to develop wealth. And so I started fixing and flipping and holding for long-term rentals, and then fixing and flipping to also sell. And as you said, I got into some spec home development and also small mobile home park holdings. And of course, I was doing this all as an individual and trying to do this at the same time that I was working in higher education, which is fulfilling and rewarding, and I loved every minute of it, but it's also demanding. And so as I was into the fix and flip and holding, there's a lot of rewards that come from that. Certainly, there was monthly income, although quite frankly, at the end of the year, if you figured all of the expenses and what have you, it really wasn't doing much of anything but breaking even. It was fun finding derelict properties and revitalizing them and changing a shack into a castle. And then there's also the aspect that there's personal control in all of that. But the problem with that is if you want to scale that, the only way to do that is to purchase more units or to flip more properties. And well, what does that come with? It comes with the 6 T's, and that are tenants, toilets, trash, and those add up to toil, trouble, and turmoil. And my balanced well-being was certainly suffering. I didn't want to infringe upon the work of my calling in higher education, and yet it was tending to do that, as well as it was certainly interfering with time with friends and family and my leisure time and leisure activities. And so it took me a while to get here because I was doing this about some 10 years or so, and it finally began to wear on me, and I go, I really need to find something else because this just really isn't scaling to the degree that I want it to. And it certainly isn't giving me the lifestyle freedom that I really wanted and was looking forward to. And certainly, I mean, we think that W-2 jobs are secure, or if we're in private practice or successful entrepreneurs, in both of those things, we think those are fairly secure. But if you have a W-2 job, you know in the back of your mind that the next cutback could be your pink slip. And if you are in your private practice or an entrepreneur, you know that you're exchanging your time and your services for money. And if there's an unforeseen accident that causes an injury, or there's an unforeseen illness that takes you out of that workforce for even a short period of time, your income is going to suffer. So whether you're in a W-2 job or you're a professional in a practice, we all experience this low-level anxiety because we know in the back of our minds, whether we acknowledge it or not, we know that that income could come to a rapid stop. And well, I found this out in 2008. Higher education, like all industries, were going through cutbacks, and sure enough, I lost my job and my income. And in my late 50s, believe me, that's not a wonderful time to find yourself in the workforce. And so I had to find something else. And so that's when I turned to multifamily. got myself educated, got into some mastermind groups, and really started investing in multifamily. And it's been a wonderful ride ever since then. So, any
Got,
questions or?
got it. Thank you for sharing, your experience, expertise. So what skills translated or, learned from, your higher education or working in higher education side or flip and flip side or rental property, spec development or mobile home parks, translating into multifamily space?
I mean, I was in higher education, and my PhD is in organizational systems psychology. And real estate investing industry, particularly investing in multifamily syndications, is certainly a team sport. And higher education is all about working with teams and transforming those teams into highly effective and efficient operating teams. And so those skills are highly transferable to real estate. And then, of course, my background in psychology and counseling are people-oriented skills, and real estate investing is certainly all about people, and not only learning how to work with and cooperate with people, but learning really how to help people to see the best in who and what they are, and helping them to bring out the best that they can be in themselves as well. And at Steed Capital, it's even more than that. We're not just really interested in helping people develop their financial well-being, but we're really, really interested in helping people to live abundantly in all areas of life, not just financially. So all of those are very transferable skills.
Yeah, awesome. Thank you very much. So right now you're focusing on multifamily space and also capitalizing area, right? So what's your criteria and select partners, operators, or markets, or property? So please share your thoughts on that.
That is an excellent question, Rama. But if you don't mind, I'll go about that in kind of a roundabout way. But we'll get to that.
Yeah.
So first of all, I mean, how do people actually develop wealth in the first place? Well, Investopedia says that there are three things that are critical. One is to make more money than you spend, avoid consumer debt, and invest your savings wisely. Well, if you're a professional or even a high income earner, there's a lot of lifestyle choices that aren't necessarily your choices. There are things and expenses that as a professional you're expected to do. And so it's difficult to make more money than you spend. And many professionals, particularly these days, they come out of their university experiences with exorbitant student loan debt. And so there's very, very left over to save with and to invest wisely. Well, Forbes has stated many times that the vast majority of millionaires have made their fortunes through real estate investing. And the Federal Reserve Bank of San Francisco did a 100-year longitudinal study where they compared all different sectors of investments. And they discovered that real estate over that 100-year period outperformed all other sectors of investing. So how do you overcome those Investopia challenges? Well, just an example of that is a friend of mine, Jeff Anzalone, he is a periodontist. He came out of school with a six-figure student loan debt, and he was asking many of the same questions all of us do. How do we involve ourselves in the work of our calling? And at the same time, is there a way for it to develop wealth? Well, he went through some of the same questions that I did. He looked at fix and flip and hold for rental, only he was smarter than I was. He did his research, and he realized immediately that that was no way to develop the lifestyle that he wanted. And so he went immediately to investing in apartment syndications. And before the age of 40, he actually became a millionaire. So it is a wonderful way to do it. And we'll talk a little bit about how that can come about. And so going back to your question, well, one of the important questions that anybody is going to ask before they begin investing passively in real estate is, how can we find peace of mind, and how can we really start developing the lifestyles that we want? Well, first of all, this term real estate syndication often frightens a lot of people because we associate syndication with the mafia and so on and so forth. Well, syndication is really nothing more than a group of people coming together to pool their money and their resources to invest in properties that we as individuals would never be able to do. And also experienced syndicators are going to be investing in properties that return unusually high returns to our investors. So you ask how we do this. Well, first of all, you have to understand how syndications work. And there are two very distinct players in any syndication. And one is the sponsor, who are the active investors. They're the ones that go out there and they find the deals and the opportunities. They negotiate the deals to get them under contract, do the due diligence, put the teams in place to provide the property management and the asset management, and take these properties through to full disposition. Other players, real estate syndication, are the limited partners, who are the passive investors. So rather than putting their expertise and their time, effort, and energy into these deals, they put their capital to work so that they themselves don't have to go to work and they can dedicate themselves to the work of their calling. So, in answer to your question, here are the 6 things that we always do, and that any passive investor should also be aware of these things. But there are 6 steps we always go through. And when we are partnering with anyone, we look at the syndicator's experience and their reputation. And that really is the number one key to deciding who we are going to invest our investors' money with. And the second thing, of course, is the property. And is that property situated and located in a place where it can reliably return kind of returns on investment that we are looking for? And in terms of, if you're a passive investor, if you're working with a reliable syndicator, they're always going to start their fundraising processes with an initial webinar that outlines everything associated with this property. So the second or the third thing that we need to be aware of is the syndicator's operational plan. And if they aren't willing to make that available to you, then you need to run as fast as you can in the opposite direction. Fourth thing are the investment terms. How long is this investment project projected to go? Unlike if people are, most professionals are familiar with investing in stocks and bonds, because that's where most retirement funds typically find themselves, and you can go in and out of those deals on the flip of a dime. Well, real estate doesn't work that way. The projects that we're involved in usually run anywhere from 3 to 5 to 6 years, and you need to know what those projections are before going into it. Another thing that is very important to look at is not just the particular property that is being invested in, and not that particular one project, but what is the syndicator or the sponsor's long-term goals? Are they just typically looking to get in and get out as fast as they can? Or are they really interested in developing properties that support the growth and development of good communities? And that is an extremely important consideration for us, because frankly, there are just too many operators out there who are looking at nothing but the bottom line, and they don't care if they're assisting the communities they're working in. So that's important to us. And then finally, you want to be sure that you are looking at the risk factors. And there's a document called the Private Placement Memorandum, and that takes you through all of the possible risks. And the operation agreement and the private placement agreement are the 2 documents that are critical for any investor to look at and to review. And if you're unfamiliar with investing passively, you certainly are encouraged to take these documents to your financial advisors and attorneys to have them reviewed before you make any investment decisions there.
Thank you for sharing detailed, explanation how you approach, finding sponsors, what do you look in the overall, sponsor level, property level, market level. Thank you. So from sponsor level, how do you get their track record or, their expertise? And also, what do you see when when you find the sponsors?
Well, a lot of it is word of mouth, and it is like if you go to the stock exchange, you can see a stock market's record. It's out there, it's public information. Well, when we're talking about real estate syndication, those are private placement agreements, and that's one thing that is challenging, particularly for passive investors, is actually knowing who and where to find these. And so that is a challenge, and it is in and of itself time consuming. Only way I know to do this, boots on the ground, is going to conferences, to local organizations, to being involved in masterminds, and actually getting to know the syndicators on a one-on-one basis. And then, of course, once you know those syndicators on a one-on-one basis, you are going to have access to their websites, and you're also going to have access to investors who have invested with them. And so you can have referrals, and you can also get to know them personally. So it's time consuming, but that's what we as professionals at Steed Talker Capital are here to do, so that you as a passive investor don't necessarily have to involve yourself in those. Did I answer that question?
Perfect. Thank you. So you mentioned conferences, right? What is your favorite conference?
Well, Multifamily Live is my favorite conference, and I'm associated with that group through Mastermind, and many of the people that we invest in are associated with. So that's my favorite, but there's many, many, many others. They're
Yeah,
happening all the time all over the country. You also have one coming up, I believe, do you not?
thank you. So what's your take on current market situation? How exactly it's impacting, overall multifamily returns or, projects?
The last couple of years have been fairly challenging. The 4 or 5 years prior to that, it was kind of a panacea. You could go out and you could find deals, and they were just everywhere, and they were workable and were producing good rates of return. And it was such a heady and wonderful market that a lot of people who didn't really know what they were doing were getting into these at low interest rates and with bridge loans. And these bridge loans are currently coming due, and a lot of people are in trouble because they're going to have to refinance at interest rates that they didn't underwrite for in their underwriting processes. So it's been a slow market because prices accelerated quite dramatically in the last 4 to 5 years, and sellers have not been willing to really address their prices to the higher interest rates, and so it has been challenging. Not to wish anybody harm, but there are a lot of loans coming due, and they're going to put the lenders and the operators of these loans that are coming due in a position where they're going to be between a rock and a hard place. And so some difficult decisions are going to have to be made. And so it's very likely that in the next year to 2 years that there are going to be more buying opportunities than what there have been. Nonetheless, the teams that we work with are very diligent teams, but as I said, it's been challenging. It's been so challenging that we really have had to go through probably 300 different offerings to actually find one property that is a viable property. We're expecting that to shift and there to be more viable opportunities in the next couple of years.
Thank you. So would you share any best experience so far? Maybe it could be multifamily or any other asset classes.
Well, in terms of the properties that we purchase, we are always looking for value add, and there are actually two ways to add value to properties. One is to find a derelict property and then to go in and do renovations and thereby increase the tenant base and increase the rental incomes. That is a good way to do it, and we have done that a number of different times. But our preferred way is to find a property that is basically taken care of in terms of repair and maintenance, but the management is not up to par. It's much easier and much faster to turn a management problem around than it is to do renovations. And so this particular property was in Murfreesboro, and this was just about a couple of years ago that we acquired this property. It was property that the owner had built, and it was, I can't remember exactly the unit count. I think it was 125 units or so. And for whatever reason, he was running. The other thing about this property, it was in a perfect location. I mean, it was a wonderful neighborhood, and he had chosen to run this property as short-term rentals, and not Airbnbs, but short-term rentals for drug addicts and other problem kind of characters. So he was turning these properties on a weekly, on a monthly basis, and so having to go in and do the repair and maintenance on these over and over and over. Well, he had a full repair and maintenance staff, and he was doing a fairly good job of maintaining that property. But for this particular property, that was a horrible way to run that property. So we acquired it at a good price, and immediately we went into this property, changed the management and the operations of that totally and completely. We did do some upgrades to it. We put in some pagodas and barbecue places and picnic areas and upgraded the playgrounds and what have you. And within 6 months, rather than it being a crack house community with people sitting on their porches, shooting up and smoking up, you can drive by there now and there are unsupervised children playing in the playground. Has not only been tangibly and financially rewarding, there's been intangible rewards, because here we are participating in the ownership of a very well managed property. It's fulfilling to know that we've been part of a process of revitalizing that crack community into a community where children can safely play in the playgrounds. And we're also part of the solution to solve the current USA housing shortage by providing affordable, aesthetic, and comfortable workforce housing to underserved communities. So it's rewarding in so many ways, tangibly, financially, and also in very many intangible ways as well.
Yeah, building better communities or social impact, right? So thank you for sharing that. So would you also share any challenging experience?
Since I've been investing in multifamily real estate, and I have been very, very selective on who I associate with and who I work with in terms of the syndication teams that I work with, I haven't really had any challenging experiences. And since I'm working on the capital raise side and not on the operational side, I don't have those day-to-day headaches either. But I can certainly think back to one of the most discouraging and disheartening experiences, which was investing in spec home development. That was a major, major setback. I didn't know what I was doing. I overestimated the value of the finished product, and I ended up not making money. I lost a whole lot of money on that, to ensure that my private investors were made whole. I had to take out a home equity line on my own property, and it was a devastating setback. Here I am in psychology, but I spent really a couple of years in major depression trying to work through that. So that was the worst experience
Yeah,
in my real estate investing career.
thank you. So any habits that are helping you to be successful and move forward?
Well, there are a number of them. I'm currently involved in a course that is called Love Decoded, and it is a course that first of all, I mean, what we learn is that love is critical as air and water and the food that we breathe. That, in fact, we know from orphanages that are overrun and staff do not have time to actually give affection and attention to children, that all they have the time to do is change diapers and feed, that we know that children in these situations experience the syndrome of failure to thrive, and actually many of them die. So love is critical. And so one thing I have just recently started is just listing out the typical morning chores that I go through. Get out of bed, feed the cats, and feed my horse Dolly, muck out her stall, brush my teeth, get dressed, get ready, put Frodo and Thackeray, the cats, outside for the day, go to work, prepare lessons. I still continue to teach because I love it, and prepare lesson plans, prepare for interviews for my podcast. So in each and every one of those tasks, before getting involved in that task, I tell myself, I love myself, and I'm doing this because I love myself. Because love from others is wonderful to have, love and acceptance. We all need that. But until we can really extend that love to ourselves, we're always going to have a hole in our soul. So that's what I've been recently doing.
Awesome. That's so powerful. Thank you. Thank you for that. Any books impacted your life?
Yes, Grit by Angela Duckworth, which talks about passion and persistence. And the two are actually essential for anyone's ultimate success. And high performers have a passion for what they're doing, but they also have amazing amounts of persistence. So that's a wonderful book. And the other book that has been very helpful, informative is by Martin Seligman, and it is called Flourishing. And in that, he outlines the 5 areas of well-being that are critical to thriving and flourishing, and those are positive emotions, engagement, or some people call that flow, relationships, meaning, and achievement. And at Steed Talker Capital, we are adamant about being sure that we are helping all of our investor partners to experience all 5 of these things in their life. And I add a 6th one to that, and that is financial well-being, which surprisingly, if you go to the psychology literature, it's very difficult to find anything pertaining to financial well-being. You have to go to economics and finance to find research on financial well-being. I think all 6 of those are critical to living a life of flourishing.
Thank you again. So how can listeners can connect with you, Alen?
Thank you for asking that. They can certainly go to steedtalker.com/webinar. And there they will find our webinar on real estate investing reimagined. There they will learn more about the 5 elements that make real estate the ideal investment. They'll discover how to substantially reduce their tax liabilities, learn the secrets of recession-proofing their nest egg, learn how to beat eroding effects inflation, and there they will explore the unique ways to find the syndicators who are passionate about helping them to build financial well-being with higher than average returns. And also, we will be going over how to avoid the hidden risks and to find the key criteria to look for when evaluating investment opportunities. So once again, that is Steed Talker, and that is Steed like the horse and Talker like I'm doing now. So steedtalker.com/webinar.
Awesome. And thank you very much, Alen. Thank you for sharing your journey and also how your criteria to select, properties or operators, and also sharing your best and challenging experiences and also personal side and your habits and also books that impacted you. And thank you very much. I really appreciate it.
It's been my pleasure. Thank you so much, Rama.